If we want more stability, we want clear regulation, having a Fed master account actually is a net plus to that. You want to de-risk stablecoins. Having Circle have a Fed master account, have Ripple have a Fed master account, that's actually a good thing. And held to the same regulatory standards as a bank. Great, we're in.
Welcome back, Bull Runners. We're going to hear a bit more from Brad Garlinghouse in a couple moments here on what their objective is when it comes to the institutions. But XRP has had a fantastic month so far. After ETFs have launched, $666 million in volume and inflows just this month. And that's in less than 2 weeks with these ETFs launching. XRP is also up about 16% in the last 7 days. We're going to jump into the charts in a few moments here because the supply on exchanges has dropped over 45% in the last 60 days. Fresh data from Glassnode shows a major supply shift happening right now, from 3.95 billion XRP on September 21st to just 2.6 billion XRP on November 27th. And while there's no doubt a liquidity crisis taking place, a supply shock could also be afoot. Kazakhstan also just announced that they're going to sell their gold reserves to buy up to $300 million worth of Bitcoin and crypto, showing yet another country shifting into a strategic crypto reserve. While we may not be experiencing a bull run just yet, there are signals flashing that the bottom of the market may actually be in. We all want to be positioned to maximize our gains as much as possible. That's why I need you guys to stick around a little bit later on in this video. I'm going to share with you an opportunity to diversify your portfolio by getting into trading with the littlest risk ever possible. But as always, welcome back to the channel. I am JR, your favorite crypto dad, and you guys know what to do. Give me a comment, 777, down below if you're feeling bullish, you're feeling blessed, and you are ready to be the first millionaire in your family. Smash that like button, hit subscribe to affirm it, and let's run into the video.
Hey, Bull Runners, for the next 96 hours for Black Friday through Cyber Monday, we're doing something that we've never done before and most likely not going to do again until maybe another year from right now, but we're opening the doors for a 7-day free trial to altcoinpro.com. So that means you're going to get full access to 100+ expert curated classes, everything you can imagine about crypto. We got live weekly calls with our research team, state of the market monthly reports, daily altcoin picks when they pop up. Now, even during a bear market, we have DeFi liquidity pool strategies that you guys can leverage to be able to earn passive income regardless of market conditions. We got airdrop alerts. Plus, we have a 20% partner program if you guys want to share Altcoin Pro and earn passive income, by being a partner with us. Now, here's the craziest part too. Even if you forget, let's say, for example, life gets in the way and your card gets charged after 7 days, well, you're still protected by our 14-day money-back guarantee. So I'm not asking you to buy, I'm asking you to try it because it's effectively 21 days, completely risk-free, and the doors are going to close Monday at midnight. So to grab your spot before the 7-day free trial is gone, all you need to do is go to altcoinpro.com. The link will be above this video or it'll be below the video. And if you're sitting there right now thinking to yourself, well, I got to, talk to my significant other, I got to talk to my wife, I got to ask their permission before I get started. Amanda, what do you got to say to them about that?
I never ask my permission when you need to buy something.
True. So click the link above, get started. It's free, guys. So I'll see you on the inside. As always, you know what to do. Stay bullish.
No doubt about it, an XRP supply shock might actually be taking place before our eyes. The question is it really going to have that much of an impact on the price in the short term? Many of us have been sitting around waiting for XRP's price to move, and we're going to jump into these charts a little bit later on and talk about this data. But the fact remains, this liquidity crisis is afoot. Something huge is happening, and nobody's connecting the dots. The CME halts trading the moment physical silver stress shows up. Then, at the same exact moment, the banks quietly yank $24.4 billion from the Fed standing repo window. Banks are scrambling for emergency liquidity. Technical issues suddenly become the universal excuse. Markets freeze when they can't meet real-world deliverability. We saw this in crypto on October 10th, and it is bleeding over into the rest of the stock markets as we speak. And this happens on a half-day Friday with no month-end pressure. You've got to be kidding me, folks. This is coming from Stellar Rippler on X. This is a great post, but I encourage you guys to do a deep dive on the comments a little bit later on if you have some time. And if you don't, just stick around for the rest of this video. We'll talk about what you can do to circumvent these liquidity crises.
And speaking of banks, I mean, Ripple has applied for a national bank charter.
Yes.
Can you just sort of give a brief overview, any updates in that process? How are things going there?
I don't know the exact answer. I mean, look, I think it depends who you talk to. It's been a little disappointing to see some of the traditional banks start to lobby against things like that. It's like, look, if we want more stability, we want clear regulation. Having a Fed master account actually is a net plus to that. You want to de-risk stablecoins. Having Circle have a Fed master account, have Ripple have a Fed master account, that's actually a good thing. And held to the same regulatory standards as a bank. Great, we're in. We feel like we're already doing that. Ripple launched our stablecoin under a New York trust license, which we feel like is the gold standard above what even others have done, because we are all about serving institutional money movement.
The hard truth people don't want to say out loud, though. You cannot compound when the system is subtracting faster than you can add. When the inflation eats the base, taxes skim the flow, the real yields stay negative, the old compounding model becomes a museum artifact. And this is why the young do not invest in prudence. More accurately, this is why the young believe in YOLOing it, because many from this young generation pointing out that the paradigm has shifted. 30-year pensions are gone, 401ks, Social Security is at risk. The Ponzi schemes have been exposed, and they don't buy it anymore. They invest with convexity. When linear paths die, people reach for asymmetric ones. It is not irrational, it's adaptive. The math changed, the behavior followed, and now we're left to figure out a path forward. Alternative data shows that U.S. layoffs are surging. Job cuts tracked by Macro Edge jumped 70,000 month over month in October to 154,000, the highest in 2 years. Monthly job cuts have now exceeded 100,000 for the 5th time this year. At the same time, layoff announcements compiled by Challenger Gray spiked 99,000 to 153,000, the highest since March. This also marks the highest monthly number for any October in 22 years, all while employees notified of mass layoffs via WARN notices tracked by Revelio rose 11,900 last month to 43,000, the second highest in at least 2 years. U.S. layoffs are accelerating, meaning less people are going to have less money to invest in the retail sector of the markets. And in crypto, retail investors are the lifeblood of the markets. That's why we saw a big pump in Bitcoin, but we saw absolutely nothing when it came to the retail market. Again, we'll talk about that in the charts in a moment here. There is some positive sign to this, that there could be a turn, a shift taking place, and that's the Coinbase premium just flipped positive. U.S. buyers are starting to return. I wouldn't say they're back. I wouldn't say that we're about to have a bull run. But after weeks of deep negative prints, the Coinbase premium index just snapped higher, and it did it fast. Check out this chart. It's a big fat green candle on that index. This is measuring retail inflows, and it does signal that there has been some retail emergence. Let's jump into the charts before I share with you guys one opportunity how to diversify your portfolio. Now, again, none of this is financial advice, simply informational, educational, some entertainment purposes only, but a quick refresh here shows us that our fear and greed index has ticked up to a 20. We're at $3.09 trillion for the total market cap. Altcoin season index, that's your retail factor right there. Now, the index is down to a 22. Not terrible, in my opinion. What I'm looking at over here is the inflows, and I'm seeing $1.28 trillion for the total market cap for altcoins as a whole. That is basically chopping sideways. And as we jump over into TradingView, we'll first look at Bitcoin. We can see where things are actually headed on this one. A beautiful holiday week, experiencing a rise in Bitcoin, sitting at about 90,000 at the time of this recording. And again, these numbers are on my charts, not your charts. So they're not only not financial advice, but they are subject to change from the time of this recording to the time you see this video. But seeing that we are about 90,000, the bigger number I'm looking for here is the 1100 EMA. And again, I've talked about this in previous videos, and we bounced well above that. Should we run to the downside, that would be where we're looking to go. We're not looking like we're going there just yet. Now, I want to talk about something on that 1100 EMA. That puts us down about 72 to 74,000. Many asking, how much lower could we go if we break to the downside? You just need to go back and look at the charts, right? When in doubt, zoom out. So if we go back and we take a look at 2022, let me get this guys zoomed in a little bit here. We made our high early on in the year in 2021. At the end of 2021 bull run, we made our new all-time high high, and we started to come down. We had our complacency high right there. Final capitulation as we chopped down to rest here at the mid-cycle low, which is right around that $30,000 mark. The only reason we went lower than that was because of the black swan events that took place. We saw the Terra Luna anchor protocol collapse, and that took us back down to the last solid area of support that we had around that $18,000 mark. The question is, are we going to experience another drop below the mid-cycle low? We started to bounce off of this mid-cycle low area in the past week or so here. It doesn't mean that we're out of the woods. We could actually drop down a little bit lower into that $72,000, $74,000 range. It coincides with the 1100 candle right there. But people say, well, what if we break below that? What if we break below the bottom of the mid-cycle low? Well, I mean, there's a lot of support that we've got to talk about somewhere in that $67,000 to $69,000 range. I'm not even going to worry about it at this point. I'm just going to talk about honestly where we are, which is a clear bounce, a very decisive reversal at this point. Sure, we have a chart that has rolled over, but we do have a 50 EMA up here that is starting to round out this bottom right here. If we can get back above the 50 EMA, that's back above 100,000 at this time, we could be really in a position to start making another run to the upside. I'm not saying it's going to happen right now. I don't think it's going to happen without any major catalysts like a big institutional and retail influx, but who knows? Anything is possible at this point. We have JP Morgan basically launching a competitor to MicroStrategy at the same time when MicroStrategy is an extremely attractive product in itself. Let's jump over into Ethereum because this is our retail indicator. And this is where I have a lot more hope for the next crypto bull run, whenever it may be. And this is that Ethereum has bounced off of this 1100 moving average. Now, again, this is not the end all be all. This is just one metric I look at, but the 1100 seems to be a fairly regularly used institutional measuring stick. Couple that with the 50 on the wolf pack down here, and that is when the 1100 crosses over the 50. If it crosses to the upside, that's moving bullish, like you see right now on the daily chart. If it crosses to the downside, that's moving bearish. We are not there. On the daily, we are still showing bullish. We have a very clear, decisive reversal right there taking place and off of the 1100. To me, that signals that Ethereum might be moving into more of a retail pump or a little bit of a bull trend, right? And when you look at the data that the Coinbase Premium has flipped and then it's coming back, it's positive, it's bullish. It shows that retail might be waking up just a little bit. We can start to see some money rolling in. The other metric that we look at for retail is going to be the ratio of all other cryptocurrencies against Bitcoin, with the exception of the top 10, excluding the top 10. And this is a metric that has been showing that retail has basically been non-existent since the early 2022 start of that bull run, going all the way back there, right? We've been running down this downward trending resistance, which eventually needs to get broken. The exciting part is that once we break it, we will likely be crossing over the 1100 EMA as well, finishing out this W pattern right here and making a run to the upside. That would probably be a pretty decisive bull run at that point. Now let's get into XRP because that's what everybody's actually here for. It's $2.21 at the time of this recording. You guys can see that right there. And as we check out the rest of the charts on this, again, decisive bounce, reversal, just like Bitcoin, the rest of the overall crypto market. So I'm not too concerned about that. Starting to see a little bit of a red candle today forming at the time of this recording, but again, it's a very small one. It's a small little wick, and we're still in a holiday weekend here, so I'm not terribly worried about that. We had our little bit of a run up. We're holding really strong about $2.16, $2.17. We've been in that for the last few days, and this is obviously a very micro picture I'm talking about here, not a macro picture. In the short term, I see that we have chop, we have consolidation. That's a good thing. And couple that with a supply shock or just the fact that the supply has been leaving exchanges, there's going to be a lot more stability in that. So should we get a fuel on this fire? Should we get a catalyst to pump us into more bullish momentum? I'm excited that we could start to run up and start breaking levels of resistance. First area we're going to be looking at is going to be somewhere around $2.30. Once we get above that, we've got this $2.61 to $2.74. That's going to be the strongest resistance. We need to break that before we can even think about making another high. We need to break it. We need to come back down and test it and chop and flip it, turn it into support, and then bounce off of that and take off to the upside from there. That's what I've got on XRP. My bigger question is, what are you doing to diversify a portfolio? So many people are just sitting on a bag and thinking, I'm just going to invest, I'm going to dollar cost average, and I'm going to catch these runs every 4 years. Maybe we're not in a 4-year cycle anymore. Maybe it's every 2 years now. Who knows? But quite honestly, that's small brain retail investor right there. Institutional and retail millionaires and billionaires are the ones that are making money in the markets, no matter whether they're moving sideways, up, or down. And that is trading, right? A lot of people say, I don't have enough money to get into trading or enough to risk anything. And I say, poppycock. This is an opportunity to get in low and use a funded account to grow your trading portfolio. So if that sounds interesting to you, we got one more question for you.
What if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a 100K funded account with zero of my own money on the line. I just paid a one-time evaluation fee to take a trading test. That's it. Because everyone's been asking us, how do I get crypto loans? Or how do you leverage trade without risking any of your own capital? Well, that's exactly why we're leveraging Breakout, which is a crypto prop trading firm recently acquired by Kraken with over 10 million clients, 2.5 million funded accounts, and over $1.5 billion in revenue in 2024 alone. They will fund you up to $200,000 after passing one simple trading test. And you get to keep up to 90% of the profit, and you can withdraw in USDC 24/7 after passing the trading test through the link in the description of this video. Now, here's the problem that I've seen most people face. Let's say you're trading with $10,000 of your own money. That's your rent, that's your groceries, that's an emergency fund. And one bad trade or black swan event and poof, your account is completely blown. Rent's late, savings is wiped, and your family is stressed out. So you're not trading to win. Trading your own money is trading for survival. Whereas trading with 100K of risk-free capital is freedom. In fact, if you only have $10,000, you should never be trading with all of that. Instead, if you took just 10%, which is $1,000, and you buy the 100K or the 200K breakout test, and you pass the test, well, you're going to be trading with 6 figures without depositing or risking any of your own money. This is what I'm doing right now. And if you fail the test, you only lose $1,000 instead of your $10,000 because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple $1,000 trading test. And the best part is there's no limit on retries. So that $1,000 can give you 10 shots at a 100K account if you fail the first few. That's 10x better risk management. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use. That's OPM, other people's money. You pass the test, you trade Kraken's money, and you get to keep up to 90% of the profits. And you can withdraw USDC on demand 24/7. So I paid, I passed, and now I'm trading 100K, and it only cost me $1,000 rather than risking $100,000 of my own money. And now it's your turn. So do not buy the small test. You're here to scale your portfolio fast. So here's exactly what you need to do right now. I left a link in the description of this video, and when you click it and select the classic one-step 100K or 200K account test, you simply click Start Trading, and then you enter in the affiliate code 777 on your checkout to get the maximum discount on your 100K or 200K funded account. And make sure to check the add-on box for the 90% profit split. It's only $100 extra. It pays for itself in your first payout, and if you skip it, you're leaving 10% on the table forever, so it's well worth it. Then you simply pay for the test, you pass it, you have an unlimited time frame, and you get to keep up to 90% of the profits. And again, you can withdraw in USDC anytime that you want after you pass the test. That's it. Now, we do earn a small commission when you use our code 777, but it supports value-based videos like this, and it'll help you get the maximum discount on your 100K or 200K funded account test. So click the link in the description right now, take the test, and let's get you funded.
Guys, remember that code 777. Let's see where XRP and where Bitcoin and the rest of crypto is going to go. And I will see you in the next video. Thanks for watching.